The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 12th of December. We're looking at the Dow having tried to rally earlier on. Actually went to 44,208. Now it's at 44,083. It's really struggling. So you see this chart. If this was a peak D, I'd have no qualms. I'd say, okay, Dow is weakening because it's already accomplished the goal of a D, the fourth highest peak in a buy mode. And we alphabetized them. Peak A is the first, higher leg up, 1 penny above A, starts leg B, becomes a peak B when it turns down. 1 penny above B, starts leg C. Well, 45,073 on the 4th of December. The candles themselves don't look too bad. Look, it's taken all this time, 6 candles from the high. And if you go 1, 2, 3, 4, 5, 6 candles on the left, if you go to the 7th candle, look how strong it is. It's been from the 43,900s all the way to 45,073. So it's taken this time. It's a very orderly move to the downside, but you've got the QQQs going to an all-time high. You've got the S&P rallying strongly. IWM has been a little bit weak. What is going on? Well, what's going on is that within the Dow, I went through this yesterday. I discussed it, that over the weekend I was going through, on Tuesday night, I was going through all these different Dow charts. I went through the whole Dow, and I might be wrong, but about 15, that's half of the Dow 30, had made round numbers at recent highs, or highs that they had made earlier on, but it was a high. I mean, even an IBM, look at this, IBM had a 239 all-time high on the 9th of December, but it had a 230 round number open, and here it is at 231. So that's important, the fact that I need to just check that. Yes, that's that same candle. So it's just a little bit above it, and that's a good sign. But it did make that round number. Look, even CRM, Salesforce, all-time high, 369.00, is holding quite well. But what I'm saying is it's a clue to me that there is some weakness there. It is an intrinsic weakness. It is weakness because some, I don't know if they're money managers, whoever it is, some people thought that they've just got to get out or got to get in. And with that round number, that just is a hint to me that there's a little bit of hysteria there. Why else wouldn't you put 369.03 or something like that? You just hit a round number, boom. Okay, that's one thing. Secondly, the VT, which is the Vanguard World, this is Vanguard Total World Stock ETF, U.S. stocks. ETF, why did I put U.S. stocks? Because it says Total World Stock. I don't know why I did. The United States component, part of the component, they have 49% of the world's Vanguard total return. Well, what happened there? All-time high. And then, that's 4 sessions ago. Look at this. Let's get rid of that. 4 sessions ago, on the 9th of December, pulls back quite sharply from a 123.64 all-time high. And that's a peak C. Yes, it has started to rally. It's trying to rally towards that previous high, but it's been very difficult. So I say to myself, okay, what do you have to put in the pie when you're looking at the whole thing and you've got yourself the chessboard in front of you? Then you have to harken back and use memory, and you have to say, well, wait a minute. Do you remember back in 2000, I think it was the 14th of January, the Dow made its all-time high, but it took until March before the S&P and the SMHs, the semiconductors, made their high. So highs, tops, but I'm talking about significant tops, and I don't know if this is a significant top. I'm just saying tops are made very often in sequence, whereas bottoms are made as a culmination hysteria, headline, reversal in unison. All right, so I have to be aware that there's a chance that there will be an all-time high peak C failure, and it's really unusual to have that. Less unusual in the daily than it is in the weekly and monthly, but still, and there's no other way I can count this. Look, here's the VT. This is the Vanguard Total World Stock ETF. Makes a low at about 117 as we're going into November, late October, early November. Peak A, peak B, pulls back sharply, a gray A underneath that peak B, a gray B, and all of a sudden you get your C, and there are no candles that are parallel. If they were parallel highs, even within a fraction, I could say, hey, wait a minute. That could be a D, a phantom peak, and then you can get your D. Then I'm happy. Or there's a rally to just underneath that previous high, and I can call it a peak C1, C2, satisfied all the requisites of a buy mode in the Chapman minimum buy mode target. We haven't got that. And yesterday actually was the day that there was a really good opportunity. Dow was weak while the other indices were good, and it couldn't do it. It got repelled at the 14-period exponential moving average. Now, for the first time, you've got the 9-period moving average getting really close to the black 14-period. Why am I spending some time on this? I'm doing it because it's not just for you, it's for me and for my subscribers. We did go to a short position, what's the day, Thursday? On Tuesday, in the SPXS. I wanted that more as an insurance policy just because the Dow had already pulled back, and I wanted to see if there were opportunities for the Dow to rally. But my thinking was that if there was market weakness, it would show up in the S&P because there would be a mix between the QQQs and the Dow-type stocks within the S&P that are pulling back. So we got in at 580, if I can remember correctly, it was 580, let me just check, 585. And the low yesterday was 570. Well, I put a really tight 12-cent stop. I wasn't prepared to hold this because it's been the wrong thing to do, to hold this particular vehicle 3 times short the S&P for a long time. So we took a tiny little loss, and here it is today at 5.79, a high of 580. It still hasn't got to that high from Tuesday. So as I see it right now, this is a period, and I've been talking about the reason why exactly a week ago, Thursday a week ago, on that big spike up, we took gains off all our really good positions and raised cash. We've got a nice core position in each one of the issues that we have. But this is the moment of truth. This is the moment that says, okay, what are you looking at that can tell you that this is some kind of a more serious top? Or if it's just this, what I've been talking about, a digestive phase and a rotational digestive phase. I'll talk about that in a moment because we need to look at the Mag 7 stocks. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So I've been talking about the divergence between the Dow, which is, people always say it's only 30 stocks. Hey, these are really important stocks in the general market, number one. Number two is within the context of the overall market, we have some very distinctive action going on. There's the Dow, there's the QQQ, that's the Index 100. Give me 1 second here. I just want to see if this is worth what I wanted to do. So I've got here. I'm sorry. I'm still on the chart right here. I'm still stuck at the. What is this? This is the ESZ. But most importantly, I needed to put the. Let me just do this if you don't mind. But I needed to change it, and I haven't changed it yet because I haven't got it notated here. Although when I'm trading right now, I'm actually trading the March contract, 2025. So this said that I just want to do this real quickly because there's just a ton to do. I wanted to show the huge arch formation where we went underneath the support that I was looking at yesterday at 9:40, just over 24 hours ago. And that was at E-mini, this is the Z contract still, at 6,072.50. And what did it do? It went down even lower. It didn't take out this candle right here with the low of 60.50, but today's low so far is 60.67.50. It's at this particular, remember 1020 is 1019. 1020 is when I always anticipate that first part of the program, market program. It goes from about 6:30 in the morning to about 8:30 where there's some kind of economic news. Economic news today was a spike up, spike down, and then a general malaise as an arch formation turned the market down and we pulled back. And we've made a low. I don't know if it's the low. To be confirmed, you need to this 10-minute chart, and I could switch to the just for the moment, I'll go to the ESH25. I haven't got it notated at all. I will finish that up today. But it's the same chart. It's just a different price. So you need to see the ESH, that's the March contract 2025, start to trade above this 200-period exponential moving average of 61.45. If we can get to 61.52 any time in the next I'd give it all the way through to the end of Steve's show at noon. And if it's able to do that, it'll say, whew, a lot of selling going on, but you've still got this bifurcation in the market, but you've got, and I'll talk about this, I need to, Al, if you're around, to focus on the charts, there's the scales of justice, and you want to see something take over. When one side's weakening, then the other side must move. And that's what I want to see. I want to see the Dow. It's not doing it right now. It's down 65 and the S&P is down 17. So the Dow is down only 0.15%. The S&P is down 0.30. I want to see, at least for the next 2 days, the Dow leading. All right, that's all I wanted to say there. Now let me go back to this particular chart because I've got it all notated later in the day. I'll try to update it. Meantime, back at the ranch, most importantly, I needed to go through these very quickly because I have a ton of work to do. I've got oodles and oodles of things. Plus, I had a question for today, Basil. Today's show would be great if you could address several positive metrics. 9 over the 14, that's the 914 EMA. The Trin reading, I'll talk about that. And the 120-minute chart, Trough D. And the daily peak C. Okay, I've done some of it. All seem to point to a burst to the upside soon. Let me get to that. Let me just finish this because I usually do the update and I do everything, but I haven't done it today. So here we go. Once again, the Dow right now is trading down 63 points. It's imperative that if there is going to be a rally with the MACD expanding, the stochastic at 57%, on balance volume very oversold. 9-period moving average very close to turning down. You can see this is the green line and the black line. The weekly and monthly charts are still fabulous. So you want to see that. And as I said, you've got history where there's a rotation at tops. That's all I'm saying right now. So let me go on. S&P right now. S&P was doing great up with the S&P. I'm going to finish this up. S&P has come back a little bit. It's down 16 at 6,068 after a big session like that yesterday. You'd expect some pullback. It was a little bit too much. But in the meantime, I'll talk about these. Tomorrow's Technical Friday. I'll go into these inside track repellent zones, and whether they're magnets or not. And he has one in the weekly chart. He has one in the monthly chart. We're way above it. But let's just get to this. I want to get to the QQQ. 1, 2, 3 has it come back. QQ's down 2 at 527.80. It had my all-time high yesterday, holding very nicely today after that big gain. Next thing I wanted to look at was the IWM. And this is very frustrating in the sense that it's taken time, not that much price, 244 to 235, 236. That's not a big deal. It's taken time in a flag formation that usually says, watch out, there could be a quick pop to the left side high, nearest high, and that's the high of 241.38 on the 9th of December. But it's making lower lows. It's just made a leg D. Remember, until it makes a higher low, these are called legs to the downside. It becomes a trough if tomorrow's low is higher than today's low of 235. 235, where can I see? 235.53. Okay, let's go to the SMHs. Really important. SMHs trying to rally down to at 243, but that 9-period moving average is weak and it just doesn't get the oomph. Next thing I want to look at, didn't I do this? All right, gold. Gold was down, is down 45. Big move down, but the 9 is still way over the 14. You made a cup formation. It's good. The weekly chart, the 9 is still nicely over the 14. It's very important. Let's do silver quickly. Silver is trading down at $1.13 at 31.82, and it has made a peak C. This is my notation here. Oh, no. Yes, leg C. Today it even went to a higher high. So this is a very sharp move down. A weekly chart is just, the 9 is not as good as the gold contract. Let me do high-grade copper real quickly, pulling back from the 200-period moving average. What a beautiful indicator that is. You just put that on your chart. You don't have to say or do anything. When it hits it, How does it react? In this case, it got repelled at 4.33, the exact 200-period exponential moving average. Let's go to crude oil. Crude oil had a big move up from 4 days ago, from the 67 area, went to today's hour of 70.72, and is now pulling back 97 cents. Let's go on to one other thing that I need to, bonds. The TLT right here, look at that, peak D. If that 9-period moving average crosses pink, that's going to go to a sell signal, maybe almost immediately to a sell mode in the daily. The weekly chart is still in a sell mode. Monthly chart's got the lowercase h, it goes to a lowercase f. Real quickly, so the question is, the 914s are holding well in the Dow and all the different indices, and that's a good sign. The 120-minute chart, well, that held support and it's trying to rally. It should rally. And the daily peak C I've discussed. I'll go into it a little bit later, but I've got all these stocks and things that I want to look at. I'll get back to you in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So yeah, I switched to the ESH 25, and look, once you start fresh, you pick out the lowest low and you count each successively higher peak, and you expect that if the MACD is strong with the aperture between the green and the red lines, that's the 9-period differential, and the 26-period exponential moving average is strong on the histogram 0% line is expanding, that you can go higher. This green line essentially illuminates and outlines. This is the chart that you're looking at. This is the price of the symbol that you're looking at, is really that 9-period differential that you're looking at in the MACD. If the stochastic is 80% and holds over 80%, it's at 86%, there's a good chance you should go to at least a D. That's the Chapman wave methodology. I didn't even need all this stuff here. It made a low with a doji candle, count each successively high peak, and you wait to see if it does get to D, and then you reassess. I've got an automatic Chapman wave resistance level. 61.47 went right through it. 61.51 is the next. And this is a single leg A. And the 9-period in the 5-minute chart is just about to cross positive. Still very weak, but we're nicely above the 200-period moving average in the 10-minute chart. So I'm doing this live because these are the same techniques that we use for the positions that we have had. And we've had some really nice positions. So let me go to this. So the bonds sharply down. That means the TBT finally is moving to the upside and getting into that big gap around about, you remember in November, there was suddenly that plunge in the yields. But now it's getting back into that. And this is now brand new leg A. But I can't even call it a buy signal because I haven't yet got, remember, uppercase in the way up in the Chapman wave methodology, lowercase in the way down, trough D. And now the MACD has to cross positive. Look at the relative strength in the yields, TBT, that's the ultra short limit 20-year Treasury bond. Good action, but that pink 9-period moving average has to go green. That's really important. So yes, thank you, Kevin, for that. I agree. And then you sent a note saying the market had a great excuse to have a big market drop this morning, but didn't. These small drops seem like a very small and high-level consolidation. It is in the context, but when I look at the Dow, and this is what I wanted to get to. When I'm looking at the Dow daily chart, if you look at the IWM, look how it's taken a lot of time with small candles, making low lows, even got to a leg D to the downside. But look at the Dow, the way, that's a pretty sharp pull. The small candles really compared to those huge ones on the left, that's taken time, but it's taken time and price, but it hasn't yet turned down. So now the Dow's only down 3. That's good. I want to see, what I say to subscribers is I want to see after 130, I want to see the Dow up in the plus 60s or plus 80s, even if it's been weak earlier on. So now I can talk to this. This is called the Chapman wave. This is really Richard Arm's short-term trading index. I captured it a long time ago, and I use it as an indicator. And what I have is these are the numbers I've never given out. All the techniques that I've given webinars on and talked about, this I don't, because the numbers are going to change at some point. I don't want to be stuck with some numbers that change and everybody thinks, oh, that's the number, it's not the number. But if the trend goes over a certain level, it went to 2.51 yesterday. Invariably, what happens is that night into the next day, the S&P futures are up, and that strength carries through to the next day. It hasn't happened yet, but this gauge is still active all the way through today, meaning that there should be a strong S&P rally. We've already had that. So in a sense, you've gone down, but it is giving you a sense that there is residual strength that can allow the S&P, after the selling is finished, to rally. That's all it means. So it's worked. This is a huge percentage. I cross them out when they fail. I mean, I can drag this across with a red line through. There's one. Look, there's one that failed. But otherwise, almost all of these have worked very well. And on the downside, if it goes to a certain level, under a certain number, the Dow the very next day, no matter how much the futures are up, the next day will be negative. Even if it's just 1 point for a moment, it'll go negative. And it failed right there once. Oh, there it is, over there. So this has been a very nice indicator that I developed years and years ago. Another one of those myriad proprietary indicators that I have. Okay, enough with that. So look at this. This is so interesting to me. Simon Properties. I always follow Simon Properties because I think they have the Chestnut Hill Mall. Back when I moved here from the Back Bay decades ago, moved to Newton, straight afterwards or about the same time, Chestnut Hill Mall opened. So, and that was Simon, I believe it was Simon Properties. I've always followed it. So SPG, as a kind of a market indicator, just a more sort of an economic indicator, just to keep in mind. I don't use it other than as information. Made a leg D, Simon Properties shopping malls last month. It went to a G/C in the weekly chart with no technical indicators, negative, and it went to a round number 186, round number high, all-time high, 186.07, not once. It did it on the 26th of November and the very next session. Round number times 2. And it's pulled back a little bit, but not a big deal, but it was a peak D. So that's what I'm expecting from Ds. That's where other things can happen. All right, I just wanted to do that. Next thing I wanted to do is, let me go one at a time. So I did that. Oh, so first of all, I want to say, no, this is not first of all. It's the next on the list. Thank you, Pat. I noticed it yesterday in the Tiger YouTube. Pat said, I never miss one of Basil's shows. I really appreciate Pat. Pat, are you the same Pat that was in Cape Cod? But not Sandwich. Was it Sandwich? No. What's on the opposite side? Back a long time ago, maybe 12 years, 15 years ago. Anyway, so yeah, thank you very much. I appreciate that. Let's go on because I wanted to do this. So I did that. Then I thought I had mentioned it yesterday, and I said I'll follow through today. So RIG, which is trading right now, Transocean Limited, this is the in the oil sector, is down 14 cents at 396. And what I said is, with all these big technicals in my technical indicators, I would only be satisfied that this sector is starting to move. And what was that? I think it was MRO, or did I make a mistake about that? Marathon Oil. Marathon Oil. Anyway, the other one I was looking at was RIG and SLB, Schlumberger. And I think that's down today a little bit. Yeah, it's down today, down 52 cents. And I don't think they're ready. I need to see them over the moving averages of importance, and then I'll say, okay, finally, we've got some action. But they're not doing well right now. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so Himax Technologies, display drivers, touch panels, controllers, was one of our favorites way back. I can't remember, I think it was in 2017. I think it was this move right here, 20, right here. But haven't done anything with it. Periodically it pops up and then it just fails. But today it's had a really good follow through. It's trading at $8.30, up $1.60, up 23%. And look at this. This low here, so this is the way I count. It's exactly the same thing as I just did in the 1 minute. Look, this goes right here. That's the starting point, and that becomes an A right there with a nice turnaround. I love when the MACD has a really wide aperture and the price moves up. Then what happens is there's a very sharp move to the upside. The stochastic catches up. This is called Chapman wave squash. Is a particular method that I look at. The reason why I put the stochastic below the MACD is that over the years I've found, that when you get this big move up, that's called the squash, and you go very quickly to peak A, peak B, and then a C, and then the MACD has to take over. This is the torque, the starting point, and then the MACD takes over the momentum. And this is it. And it might take a little bit longer to get to a D. And that's exactly what we've done. But the left side high that we're aiming for right now, we're not in it right now. This was brought to my attention by a subscriber who remembered that we once had it. The week of the 21st of June, I had a high of 8.73. Today's high is 8.35. So that would be what I'd look at. Then I'd also try to do a left side, right side price time match, meaning that the number of bars on the left from the high to a particular low point, if it's the exact trough at the bottom, that's great. But it isn't always that way. That's beautiful symmetry. That would be right there. But I can't do that right now because it looks to me like, I'm going to do it. Let's see where it takes us. And then what I do is I usually click, copy, paste. That takes us to next week, I believe. Yeah, that's very good. I can do that. That's the weekly chart. This one becomes pink because of the way down. And this one becomes green on the way up. And then I see, can I do a left side, right? Can I do an inside wedge target repellent line? And that goes from there to there. So that says, if in the next few days, going into next week, I'm going to give it 2 weeks, but if in the next week or two, if HIMAX can push above this high, if it's this week, we've got 2 days to go. If it can get above 851, then this high that was made of 873, was it 873, will become a target within the next week. If there's a sudden pullback, how that pullback is handled is going to be very important. So if today into Monday we pull back below $7, I'd say $7.82 to $7.79. If it closes under that, it's going to take a little longer. But right now, it has the momentum to push right there. And that becomes this lopsided cup formation that we talk about all the time. I've had webinars on it. If you sign up for my newsletter, you'll automatically be able to go to those webinars, check them out, and repeat them over and over. Right here, there we are. Okay. So I hope that helps you. And basically, I'm not even talking about the monthly chart as a breakout pattern just yet, because it's had these two highs in the 8s. It needs to get to 9.35 on a closing basis in the monthly chart, and that would be fantastic action if it's able to do that. All right? Because it keeps coming back into what, let's just call it a rectangle, even though it looks like a sort of a lopsided W formation. I'm just saying it's in a rectangle formation, and until you can break to now it's become a narrow rectangle. Oh, let me just talk about the narrow rectangle for a moment. You know, I've talked about this in the futures over and over and over the years. I say there are days when at 4 o'clock in the afternoon Eastern time, when the market closes, maybe going even to 4:15, 4:30, the S&P's had a fantastic session, up or down. And then it's just remarkable that over the next 16 hours or so, from 4 o'clock to 4 a.m. to 8 a.m. the next day, you're stuck in that range. You can't believe after such a big move. And what it does is it costs you a bundle if you're impatient, because if you're impatient, you keep thinking when it hits the resistance line, oh, it's going to break out, so I'm going to buy. What it does is it gets repelled immediately. And then you say, oh, if it hits the base, oh, it's going to break down. No, it hits the base and it keeps coming back. Well, that's what this did. I haven't got it notated here because I've got it on the other. Look at this. It's unbelievable that after a spectacular move like yesterday, when it was the S&P was at 51 or more points at a certain point, it pulls back. And then from 4 o'clock, look what it did. I mean, how restless can you be overnight? You're sitting there looking at your computer saying, wait a minute, what's going on here? It's trading within a 6-point, a 5 or 6 point range. But remember, what happens is very often in this particular range, it pops out once above the resistance line. Then if it comes back and takes out the midpoint of the long, I've done webinars on this, on the long rectangle, there's a really good chance it's going to break underneath the support level. Then it's like it happens so quickly very often, this happened at 8:30, that the price looks around and says, oh my God, I forgot to say goodbye to Harry, and it pops back up to say goodbye to Harry. And then what happens is it makes an arch formation, and if it takes out that support level again, it can go lower down. That's exactly what we've done. We've now completed that whole thing, and at this 10-20 level where I said now it's a brand new market up until, I'd even say Larry showed maybe 115 to 120. That's where you start to see a little, in that period, you start to see action has already happened. Now you've got a bit of a slowdown, and then you get into that next afternoon session. So here we are. This is a leg A in the 10-minute chart of the E-mini. The 9-period moving average finally turned green. Look, that little green thing there. Stochastics is still way underneath it, 80% to 61%. All of these I discuss in my webinars. So if you sign up for my newsletter and you just get the webinars, you've got yourself a bargain. But if you get our positions, that's also very, very nice. So now I want you to do one other thing, and yeah, we're going to go to okay, so those are the things I want. Now, have a look at this. SPLV. Remember, I showed this for months. I've been talking about this. Wrong chart. H23. I got it at 25. Got to get used to this. Okay, have a look at this. Hard to believe, but that's the way it is. Let me say, I do want to get to questions that were in the den. The next one was Amazon. Let me just do that, and then I want to go to this, show you the S&P low volatility. AMZN. So AMZN is trading. I hit something wrong. Yeah, the other game. AMZN. Yes, he's in a leg C. At this particular point, it should still go to a D. It's looking really strong, all-time high yesterday. Leg D in the weekly chart, leg D in the monthly chart. Fantastic action. And this is the retail season, right? I'll be back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Let me I had a whole bunch of things planned, but in the den, in the Tiger YouTube, we've got some new listeners, and one person just says, Mela says, wow, just found out about your dad. This was during Tommy's show. I've been listening to on and off just to hear about his real estate perspectives. I've been a listener since the 6:60 a.m. radio days here in Orlando. God bless you. And we just our prayers go back, to the O'Brien family as well. Just such a sudden loss, so sad. And then Angel says, new to trading stocks for houses for a living, and he's just listening to us, and he thinks the market's a little frothy. Yeah. So don't forget, this is a really great time because they've just initiated at TFNN. This is the Tiger Dollar Sale, and it means that whatever you buy, you get a big percentage bonus because up to 40%. Extra. So if you're listening to anyone and you are a subscriber, this is just a great time. Give yourself a treat. It's just this is where you make money, right? When you buy something, you get a really good discount. So just think about listening to our shows, see what you like. We've all got different techniques. Really wonderful bunch of hosts here at TFNN, and everyone offers something really valuable. So check out the front page of TFNN. So I want to just do this. So I see that what you've said, Steve, is you want to do the AMZD. So that's the short side of Amazon, and it's trading 11D. Remember, if you want to choose the very best of the best, what you want when you're shorting is to choose the worst of the worst. So I'd be hesitant. I'm not going to tell you not to do it. I'm just saying I'm not ready. So if you're asking my opinion, I've got Amazon at leg C with possibly going to a peak C, still one of the strongest stocks. I'd be careful between Amazon and Tesla. Tesla making an all-time high as we speak. Fantastic action. I'm looking for round numbers. I haven't seen them in these stocks. So I think the Dow is turning around. I hope the Dow can be up over 60 points after 130. That'll be really good action. Have a wonderful day. Check out my opening call.